What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and have we got a lot to talk about today. As you noticed on the thumbnail, I put Michael Saylor's picture on there. CEO of MicroStrategies. I don't even know if he's CEO anymore, but nevertheless, we're going to take a look at some stuff at the end of this video. We're going to read up a little bit about the .com bubble, see what caused it to crash, talk about that a little bit, but definitely stick around for the whole video. We have our Elliott wave count for Bitcoin that is playing out. I gave you guys that about 3 weeks ago. So far, so good. I'm going to give you my trade plan and what I'm doing. So if that sounds good, make sure you smash the thumbs up, leave your comments, subscribe to the channel if you haven't already, and leave your comments. All right, let's see what's going on. So look at the tweezer tops and bottoms, right? As you can see here, they end like very close at the top and then come down. And let's take a look at Bitcoin right now. I posted this actually about 3 days ago, the tweezer top on the monthly. It wasn't confirmed until it closed, but we do have a tweezer top here. I'm going to show you some other things that is heeding massive warning to these markets, right? Of course, Powell speaks today. That'll probably cause some disruption in the markets or some volatility, so be aware of that. That's at 2 p.m. today. But as of right now, one way I've seen these invalidated, right, is if the next candle gets up past the halfway point, right, and that's about, let's just call 66,000, right? If it can get back above that, that would probably invalidate this tweezer top on the monthly. But so far, this is looking very bad for Bitcoin. And guys, call me crazy, but I'm still looking for the 35 to 9,700 range. Let me explain. You can see here on the right, we have the Bitcoin, what I believe to be the crypto bubble, right? And again, like I said, we'll be talking about the .com bubble at the end of the video, so make sure you stick around for that. But as you can see, we had our three tops here. This is Amazon during the .com bubble, and you can see what happened afterwards. Could we see the same thing here? As you can see, this was a 95% correction. And guys, I know it sounds crazy, but this crypto is still a very speculative market, right? So if the traditional markets take a huge downturn, assets with speculation really get hit hard, the worst out of all this. So just be aware of that, because all the people that bought up here thought they were geniuses back in, the .com bubble, that it was just going to continue up forever, and it came back down. All these people that were buying in these areas lost their money for a very long time, decades, right? But the people that bought down here just slowly gained and gained for many years. But if you're up here, you were waiting to break, just to break even took years, right? 10, 20 years. Just be cautious and be careful about that stuff. Sorry about that. My phone's going a little crazy. Anyways, let's get into it. Let me show you my 5-wave Elliott wave count that I believe could just be wave 1, right? Before we do, if you guys haven't already, check out Prime XBT. By far my favorite crypto exchange. I don't trade against you like the scammy exchanges. Check the difference between an A-book and a B-book exchange. You make the call. But by using my link down below, you can get up to a $7,000 bonus, 25% off your trading fees. I'll leave a tutorial up top on how to place trade orders, and let's get into it. So this is where I'm at right now, right? So we've been talking about this for a while. I gave you this count, like I said, about 3 weeks ago. This being wave 1, wave 2. I'm waiting for wave 3 down here. I actually have my take profit at 52,000. It may not make it all the way to 52,000. I'll be watching it closely. But if you are looking for a long, this would probably be a good place for a long, up to the 56 to 59 range. I'm not sure what I'm doing there yet. I may just hold on, let my Bitcoin, gain value, and then short again up here and bring it back down. I do believe our bottom target for the wave 5 coming down is about 49 to 46,000. As you can see, there's a trend line right here, and that's where I'll take profit on that, possibly take a long. Again, it could go a lot lower, so be aware. Keep watching the channel. We'll keep you updated on it. But as of right now, it is looking like this is going to be playing out. Of course, unless we get A huge bounce right here. The markets turn around. We'll be taking a look at the Dow and the S&P at the end, so stick around. But this is that same count. This is the one I've been showing you guys, right? What I believe to be wave 1 of 2. Or I'm sorry, 1 of 5. So these 5 waves right here, 4 either ending at 57 or 59 before coming down to the 42,000 range. If that happens, this could just be a wave 1. Then we get one big rally up, maybe back up to this 67.5 range or whatever. I'll show you what that looks like. So here's that 5-wave structure, right? Then we get a wave 2 up, get everyone super bullish again before coming down to what I believe is going to be our lows, sub 10,000. This is the macro 5 count. Let me know what you think. Possible, impossible. As of right now, this is what I'm looking at. Always do your own due diligence. None of this is financial advice. Make your own decisions, guys. Watch the bullish people, the bearish people, and come up with your own thoughts on it, right? So another thing I want to show you right here, right? So this is this indicator, if you guys want to check it out for yourself. CM underscore ULT underscore MACD underscore MTF, right? So as you can see, every time we had a cross, that was signifying a top right here, right here, right here, right here, right here, and right here. One thing I want you to notice is every time that happens, we come down past that 21 EMA, which is the blue line, which we're looking at right now. We may wick back above it, just like we do every time, set on it, and then continuation to the downside. This could get very ugly very fast, guys. All right, before we get into S&P, Dow Jones, I got some targets on those I want you guys to watch too. We'll be keeping an eye on that in this channel. So again, subscribe and tick the notification bell to get you notified when I post new videos, right? Let's talk a little bit about the .com area. And then we're going to talk about Michael Saylor and MicroStrategies. All right, so the understanding the .com bubble. Several online technologies, entities declared bankruptcy and faced liquidation. That's what happened. The characteristics, the frenzy of buying internet-based stocks was overwhelming. And you can replace the word .com with crypto in this. As many internet-based companies, so-called .coms, crypto, were starting up because they were in a fairly high-growth industry. They needed funding. Funding came primarily from venture capitalist firms, primarily. Lenders and individual investors followed later. Now, instead of focusing on the fundamental company analysis involving the study of company revenue generation, potential, and your business plans, industry analysis, market trend analysis, and PE ratio, many investors focused on the wrong metrics such as traffic growth to the websites, basically communities pushing a coin, same type stuff. Causes of the crash: overvaluation of .com companies, crypto companies, abundance of venture capital, media frenzy, what? How to avoid another bubble, proper due diligence, that is huge, removing investment of an expectation. Investors should desist from investments based on unrealized potential in entities that are yet to prove their cash flow generating ability and overall long-term sustainability. The expectations lead to the emergence of a bubble through speculation, avoiding companies with high beta coefficient. So during .com bubble, most tech stocks posted high beta greater than 1, meaning their downfall in times of a recession would be much more than what the average market fall would be because they are speculative. Anyways, you guys can check that out. That's on the CFI, corporatefinancialinstitute.com, if you guys want to read up on that a little bit. But let's talk about the biggest loser in the .com bubble, which was Michael Saylor. You can read up on that. He was literally the biggest loser in the .com bubble. You can see this stuff is all history repeats, guys. And this does definitely look like it's repeating here. Could get extremely ugly. I believe Obviously, I have no proof of this or whatever, but I believe he's not as dumb as people would think by looking at the chart. I think he just uses things like crypto, the .com, to pump his stock, you know, make people think he's into it, and then people buy into his stock. He dumps his shares, then he buys back during this whole time, and he's doing the same thing now, dumping his shares. In my opinion, again, pure speculation, but it makes sense. Let's look at the Dow Jones. Same thing, looking at a possible 5-wave count, getting us down to about 36.8, somewhere in that range. And this would be just another 5-wave count for wave 5. And if this happens, this could be like the crypto one. The wave 4 for Bitcoin could be the big push up here and then continuation down. S&P, here's my targets. If we break this bottom trend line, which currently is right around 5,031. My first target's going to be 49.32, which is just the measured move from this rising channel. Or we could look at it as a bear flag, and that would get us down to about 47.52. So that's what I'm looking for, guys. Let me know what you think in the comments. Be careful out there. I know the markets will take the most amount of money from the most amount of people. The most amount of people think Bitcoin's going to $100,000. So what does that tell you? Let me know in the comments. I will see you in the next video. I appreciate each and every one of you guys for stopping by. Make sure you leave a comment. I'm out.